Hello YouTube, this is Victoria from TRADEPRO Academy, and I want to welcome everyone to our channel where we talk about stocks, options, futures, and more. We go through trading psychology, we go through strategies, and we want to give you guys the best content. So in today's video, we are going to be talking about another one of those techniques that we use on a daily basis to identify some great trade setups. In today's video, we're going to be talking about the ultimate trading setup, trading strategy for both stocks and options. I use this on a regular basis every single day. This is my go-to, and I want to show you guys how I do it and what I do with it. Now, before we get this video started, I want you guys to smash that like button and hit the subscribe button. Also, ring that little bell to notify when we do go live and we drop videos like these every weekend. So let's get ready for this intro and we'll just jump right into this video. Now, welcome to the video, and in today's video, like I said, I want to talk to you guys about the ultimate trading setup and strategy. Now, this is a great tool that I use on a daily basis, and it's a very, very simple pattern to come across. To give you guys a sneak peek, this is what we call the bull flag pattern. So we go through the bull flag pattern. We go through many different stocks to identify what the bull flag pattern is and where we can find the bull flag pattern. Now, typically a bull flag pattern is at the end of an extended move. So if we've got an extended move to the upside, as you can see here on the screen, in one of the bull flag pattern scenarios, I like to look at it in three different bull flag patterns. One that looks like more of a rectangle downward, and then the second is a rectangle to the side, and then the last one is more of a wedge. You can see them on the screen now. Now, when we look for these patterns, what you're typically looking for is an extended move through maybe some monthly tops, 3-month tops, whatever it is, an extended long move that could be looked at on a daily chart, right? Depending on if you're swing trading or day trading, or an intraday chart with this pattern coming through it. Now, there are different criteria to break down the bull flag, whether it's trigger levels or areas where you're getting in, stops and whatnot. Now, the bull flag is a breakout trade pattern. So what we're doing is we're catching momentum as momentum comes into stocks, and we can see that press continuously higher, and we could look for that short squeeze or that buy, stop, run, whatever you like to call it. So let's break it down for you guys how we can play these bull flag patterns. Now, there are a few stocks that we could look at, right? It's one thing finding these, right? You can find them on many different screeners, like FinViz, maybe even Trade Ideas, whatever it is. But you can identify these both on an intraday basis and a larger frame basis, a daily or a weekly chart, where you can identify these great breakout opportunities and you can find trigger levels for them. Now, you could use these for swing trades and day trades. You can use these for stocks and options, right? If a stock is not optionable, maybe you might opt in for the commons, right? If you're looking for an area to buy after this extended bull run, maybe it's formed a bull flag like we've seen here. Now, this right here on the left-hand side is Nordstrom, right? It's a stock Nordstrom that we were actually playing today with our team and our community, right? Quick plug for the community. If you want to identify great ideas like this one, come check us out. And to the right, we have Tesla, where you can see we do have somewhat of a different type bull flag. We have a bull flag shaping up right now as well. And we could look at other bull flags on the intraday basis too. So let's take a look at some of these different examples and identify the anatomy of the bull flag. So let's start on the daily, right? If I'm looking to swing trade this stock and I'm looking for a breakout, we must identify the first area of interest, right? So we must identify that this is an extended move that starts to consolidate, right? The anatomy of the bull flag is that you reach a peak and you actually begin a consolidation phase, whether it's slightly skewed to the downside in a flag, whether it's sideways, whether it's a pennant, whatever it is, right? So in this scenario, we could draw something like this, for example, right? More of a pennant scenario of a bull flag, or we could draw something a little more symmetric here on these tops for this bull flag, right? Something like this. This is still considered a bull flag on the daily chart. Now, the idea is the anatomy of this bull flag would be triggered on the momentum side for a buy stop run that is very similar to this extended move that we have just seen on this asset right here, if we break through not only the body tops of the candle, if we zoom in, but also the wick tops of this candle. You have to print a few steps above these wicks to actually trigger what is called a short squeeze, right? Because think of it this way. If you're a short seller from up here, right, for whatever reason, you think this thing is overvalued, right? You don't believe in the company, whatever the reason may be, and you're a short seller from up above, what you're doing is you're selling at these tops, right? On the first rejection, you're selling somewhere here. And what are you doing? You're placing your stops above these wicks, right? If you're short, you know, okay, well, as long as my stop is above this wick that had recently formed, I'm pretty safe. So the fact that this thing consolidates like this and we can't make a push to the downside, you're accumulating a lot of short sellers buy stops above, right? This is the short squeeze momentum. And once these buy stops are accumulated from the short sellers up here, right? If these buy stops are accumulated, it will only take a few cent move above these wicks to actually trigger this buy stop potential, right? So when we're looking at the anatomy of a bull flag, whether it's on the daily or the intraday, as we'll look at soon, what you're looking at is, can we find an extended move that consolidates towards its top, right? You can find these post earnings, right? You can find these on general upswings, right? Can we find this move, and can we identify a trigger point at which this move could actually open up and we could see some upside potential? So it's not only finding the trigger point, but it's also seeing what the expected move of this is. So if we grab a fib extension, right, before we talk about that trigger point, and grab the impulse start of this, maybe the high and the most recent area low, right? So based on this movement, if I'm looking at this potential extension of this bull flag, my initial target is going to be around this 76.4% area, which happens to be 33.94. And we exceeded that slightly. And my ultimate target, if it's on a daily basis, is probably going to be around that 100% mark on this fib extension, which is at 35.48, right? If I'm swinging this, I'm probably going to be looking towards that 1.5 to 1.618 area, right, on these fib extensions. Now, that we've identified that, what I'm going to do is, how do we identify the trigger point? Now, if we identify that this right here is the wick candle that actually starts the consolidation, right? This candle is very, very important because this is going to dictate where our trigger level may be, right? So if I want a trigger level, it's going to be a few cents above this candle. So if this candle wick top is at 32.47, I'm comfortable at 32.53 maybe, to look for that trigger entry to get me into this long position. Now you could, when you see that trigger point, you could set an alert on TradingView. Let's say I set an alert like this, right? Right click, add alert, and I say 53. I'm going to be alerted when price crosses through this, so I can either buy commons, or I can go to my options and say, you know what, I'm going to buy a 35 strike out of the money call because I think this guy could run, managing risk, right? And my stop is probably going to be a harsh stop below the most recent lows that started the impulse move to the upside. So two very pivotal areas at this point. So my stop is going to be under 29.79, right? That's the risk that I'm willing to take. And then my target is going to be initially right here around 34, and then around that 35, as we had mentioned. So those are two pivotal points that start that buy stop run, right? This is on a daily candle, and these are great for swing ideas. If we look at another swing idea, so let's get rid of this alert because we've already triggered this. We take a look at another swing idea that we had been looking at recently, right? Target. Now, this was a great mover. Look at it. It continued to burst to the upside. And we had this guy from a while back. Can we identify the bull flag before we even break this down? Let's take a look. Target was a great bull flag because, number one, let's break down the anatomy of it, right? You got this extended move. Number two, you got the bull flag that actually drops down like this, right? It's a channel down, a wedge down, whatever you want to call it, right? And based on this, we can identify where our trigger points are, right? If we can draw a very nice little trend line like this that captures multiple points on the daily chart like this, then we can identify where that breakout potential is. Now, the breakout potential could be the breakthrough the prior wick and this trend line, or you can break it through this one to be a little more conservative on that, right? Right here where they encompass together, where the wick touches the actual trend line, and if we break above that level, that is going to be our trigger point. So if we look at this and we zoom in a little and we say, okay, well, where is our trigger point based on this? We could say it's either right here, right? Let's say it's based on these tops, 172.41, or you can be a little more conservative and say, you know what, it's above 173.10. So once we actually pierce those areas, why is this more conservative? Because if you go 173.10 or so, right, 15, whatever it is, above this wick, these two wicks are not getting triggered, and you actually get triggered on this and start looking at immediate profit once you actually get it. Now, look at this scenario. This is a micro little bull flag, right? This is a micro little bull flag as well, where we can identify maybe another entry if we had missed this original one, right? Where is the entry here? You could say above these wicks, right here, above 177, 170, 177.90 or so. That would be our trigger point to enter this trade. Now, of course, this is a more expensive stock, so I would be looking for options more so than anything. And we could be looking for what is our target, right? If our target on this move, right, if we zoom out a little and we look at our fibs and we grab the low of the impulse, this move and the area which it stalled from, right? So that means based on our fib, if our target is 187 to begin with or 190 to begin with, we could be looking at the 190 strike, right? Or if you're anticipating a stall at these prior tops, you could be looking at the 180 to 185 strike for your options. So keep that in mind, right? You could say maybe the impulse is over here, right? It doesn't really change anything too much. Now that we've looked at this on a daily basis, where we're looking at this on a swing level basis, we could also identify the bull flag on an intraday basis, such as this, right? We can identify this extended move here on Tesla that has formed, right? And then we could also identify the start of this bull flag right here. So again, this is a breakout trade. So what we're considering is the breakout of the tops, right? Now, the first breakout could be right now, right this second, through this. This is poorly drawn. If we drop it down like this, it could have been right at this second, right after we pierced 77183, where this prior wick was. Or if you want to be conservative, grab the next wick above 772. Above that, we could start the move. Now, if we grab this area right here, we're already in some profit ideally, and we could see this potential squeeze back to the upside. So keep that in mind. If we take another look at an example, and we're looking at a stock like SE, we take another example, right? And we're looking at a stock like SQ here. Let's throw it up. Yesterday, we had a great bull flag that we were actually mentioning in the room right here in the Discord chat. We said, hey, you know what? We got this great bull flag shaping up on SQ, right? If we open up this image, this is what it looked like. We got these prior tops. We're looking for a trigger level above the wicks, right? We're looking at for a trigger level above the wicks. So this is that same area. If we notice this bull flag after this extended move on the intraday like this, and we can identify where our wicks are, right? Where are our wicks? Right here is the wick, right? Some people may even look at it like this. You know what? Like we're seeing this downward kind of wedge of a bull flag forming like this. Through these wicks, I'm going to look to get long. I personally like to wait for this more extended move through this top. And you can see through 225.30 or so, we start the move for that next push higher. So keeping in mind, you want to identify where your great high probability trigger levels are for these moves, right? You want to identify where the potential buy stop move will happen, right? Or short squeeze will happen, so you can get that more extended move. Now, it's a little more complicated than just looking at it and saying, okay, well, I'm going to get this option like this, blah, blah, blah. You can look at it that way, but you could also use the tools that you are given in your trading realm, right? So if we use a fib extension and I say, you know what, 227, 228, 229, those are targets. I could look at strikes around 228, 229 for my target, right? That's how I will choose my strike on a day trade basis on a weekly expiry. So keeping that in mind. This tool is amazing. This pattern is amazing. If you can master this pattern, you can find a lot of different opportunity and possibilities in the trading world, right? For breakouts and catching those large momentum trades, whether it's a swing trade or a day trade. This is the TradingView desktop platform. I'm using it. It's new and it's pretty good. So I recommend it to traders that want to have multiple TradingView windows open, right? If I open a window like this, I can easily just drag it out, put it on another desktop or combine them, make a few little windows together. So to add to that, that was my breakdown of my favorite options and stock strategy, the bull flag breakout. And I want you guys to go try. Do you guys use this strategy? How do you like it? And I recommend you guys back test this before jumping into it. If you guys want to know more about our options and stocks, come join us in our trading room and our community. There's a link in the bio if you guys want to know more about futures, where we learn different tools, but equally as effective. Again, come check us out. This is Victoria from TRADEPRO Academy, and this is George with a message. I hope everyone enjoyed. And drop a comment down below. What do you guys want to see next? Let us know, and we'll help you guys out. Take care, and see you next time.
Hello, and thank you for watching this video. I want to take a moment to invite you to an exclusive online trading masterclass. In this event, you're going to learn 3 key things to help take your trading to the next level. Number 1, we're going to teach you a complete price action strategy used by professional traders on a daily basis, plus give you the checklist so you know how to check off each step to qualify the opportunities. Number 2, we're going to teach you how to use advanced order flow analytics to help you qualify high probability, low risk trade setups on a daily basis. Plus, we're going to teach you how to use that order flow to disqualify the trades that you're used to taking that end up being stopped out. Number 3, we're going to show you how you could apply all of this information with a small account, because you could start small and scale up. In fact, that's the only way to start, and a lot of our traders are doing it in our community on a daily basis. This is an exclusive offer you could get online only at this event. I look forward to seeing you at this masterclass and teaching you these 3 secrets of highly profitable day trading. Take care and have a great day.